Back on November 19th, I released a video saying that I believed Nvidia had a very good chance to dump nearly 20%. I said, don't shoot the messenger. I hope I'm wrong. And unfortunately, I was right. That video got over 140,000 views with a ton of hate. And my point in the video today is to share why we thought that this fade was going to happen, and more importantly, what I'm looking to do from this point forward. If you go back and you watch this video, we were using a weekly time frame and we were paying attention to the BX trender, which is one of my favorite indicators. We have tons of courses down below. All of them are free, showing you how to set up this indicator and use it in detail. I highly recommend checking out the Elite Traders Playbook, which will show you my exact checklist, and also our BX trender course, which shows how we made over $4 million in just the past 2 years running a very simple strategy with just one indicator. Now, this indicator is so powerful because it shows buying and selling pressure. And as you guys know or might not know, the only thing that moves a stock up is not PE ratio, not valuation, not fundamentals, none of that. It's, are people actually buying? And will people outbid for the stock, aka overpay what the current price is? And the only way to tell that is to look at the buying pressure, not to watch the news, not to care about FinTwit, but to look at what these institutions are actually doing. And that's why I follow Unusual Options Flow and the BX Trender so much, because there's no noise, there's no narrative, it's just data. If we zoom out on the weekly, you will see all of these areas I have marked out in red or labeled Zone 2. These are areas when the BX Trender is red on the weekly chart. And these are areas that we do not want to trade in. It doesn't mean that the stock is going to crater. It doesn't mean that we're going to short it. It simply means that buying pressure is not there enough to actually make the stock expand. The types of setups that we want to trade are those times when the BX trender on the weekly is currently green. These are called zone 1s. And this is mainly why I have not touched Nvidia since November of 2024, because we have not been within these zones. These zones are important because they show price expansion. And what I'm looking to do is only trade in the most potent time windows possible. So if we go back to November when we made that video, you can see that our bot exited the position back here, and we removed any bullish sentiment that we had on the stock. Since then, there was a bunch of compression, a couple of pops to the upside, but each and every bounce was met with a rejection. And you can see this by every single rally making a lower high and a lower low. This is an indication of bearish structure. Then, to make things even worse, if we move out to the monthly chart, you can see that the monthly BX turned red as of January, and this is the areas that we have highlighted in blue, or zone 3. You can see the last time that this occurred, Nvidia dropped 60% over 1 year from 2022 to 2023. The last time that that happened prior was 2018, where price dropped 53%. So before we move any further, I want you to understand I still think there's a chance that Nvidia could drop another 30 to 40% worst case scenario, but we're going to talk about that here in a moment. Now, knowing that the monthly is red, we mark this off as zone 3 and we zoom back in. We can see that while there is buying pressure on the BX showing higher lows, we have yet to turn green. And so minimally, that's the first thing that has to happen. The weekly BX has to turn green. And then from there, hopefully the monthly can turn. If that doesn't happen, then this bounce we're seeing could just be met with another sell-off. Now, for those of you who are pattern traders, one of the patterns that we've been talking about setting up here for multiple months is a potential head and shoulder. This forms when price bounces, creating a left shoulder. Price therefore pulls back into an equal low. In this case, that would be a support level of 91. Price breaks out once again to make a higher high, which is our head. Then price pulls back again to that same support, which is what just happened here in April. And then we bounce once again to meet that left shoulder before rejecting once more. And if I turn on the lines, you could see that this is how price action will most likely move. To make matters a little worse, we also have a liquidity zone seated here at that support between $92 to $88. Liquidity zones occur whether it's supports or resistances, where we tap that level multiple times and price reacts very quickly. Now, a lot of people believe that the more times we tap a support or tap a resistance, the less of a chance we have in order for the stock to actually push through. The truth is that the more times we touch, the bigger chance we have for that level to break. And so what worries me is that price will continue to push another maybe 10 to 15% to trap retail, aka everyday traders and investors, into buying a potential rally, only for it to sell off one more time, break the liquidity zone, fill the fair value gaps from January and February of 2024, giving us a worst case downside price target of about $64. Now, I want you to understand that for the past couple of months that we have been talking about Nvidia, I have taken essentially no trades at all. Isolating Nvidia itself, you can see through all of April, we have not taken a single trade. All of March, we didn't take a single trade. All of February, we didn't trade. And then we had one small win in January. All of December, we didn't touch it. And then we had one trade in November. And this type of patience is what separates professionals from people who are gambling. And it's not like I got this way overnight. I've been doing this for 10 plus years. Now, if you do want to learn how I've been able to do that mentally, then go to our free course library down in the description. And I recommend starting with the Disciplined Trader course, as this will teach you how to emotionally detach from your trading and start to look at the market in probabilities. My goal for Nvidia right now is to continue doing what I've done. Nothing. I don't want to short something that is still sitting in bullish structure. That said, I don't want to go long on something that is showing selling pressure on the weekly chart and even worse, selling pressure on the monthly chart. I believe that there are much better setups out there in the market than handcuffing myself to a single stock and saying that it's the only thing I can trade. Within a given week, I'm focusing on 10 to 15 stocks. I'm not married to a single company. I'm only married to my strategy. And that is what detachment looks like. If you guys want to learn my exact trading system completely for free, go, like I said, and check out the free course library down in the description. We teach options, how to trade them responsibly. We talk about risk management and psychology. But more importantly, I share with you the very simple two-step system that I use to take all of my trades. The link to all of our courses will be down in the description.